What are insurable risks? Risk is an event with either a positive or negative outcome. Most people associate risks with negative and opportunity with positive, however. In its simplest equation, a risk is a mix of the likelihood of the event occurring and the impact of it were to occur. To make it insurable, it has to adhere to some of the principles of insurance. It must be fortuitous, therefore you can't insure something you know is going to happen. There is a paradox with life insurance, I realize. It also must have insurable interest. E.g., I can't insure something I don't own or use because it would not impact me. Then we're into more clouded areas, moral hazard. This is where insurers will make a judgment on whether to insure somebody doing a criminal event or perhaps something against the greater good. Primarily, what makes a lot of things insurable though is if it's happened before or can be judged statistically to work out the likelihood and severity. E.g., motor accidents happen a lot, so is easily insurable. However, if you were to insure one person against spontaneous combustion, then it's unlikely to get an insurance quote. The dictionary meaning of the risk is danger, jeopardy, means this word describes itself. So, risk's complete definition is, to conforms the norms and requirements of insurance plan in such a way that the standard for insurance is fulfilled as named as an insurable risk. There are a number of different indispensable conditions that needs to be fulfilled before insurability's acceptance. But, where the loss is too high that no insurer would need to pay for it, this danger will have said to be uninsurable. The insurable risk is basically of two kinds, speculative risk, and pure risk. In speculative risk, two chances are involved, loss or gain. While in case of pure risk, there is no chance of profit or gain. It's a risk that somebody can accept and finance in exchange of a premium. A risk is the potential of a loss. Normally they require to be measurable in terms of probability and severity, to be able to find a fair value of premium and financial capacity to afford the possible losses. In real life, not all risk can find insurance or only limited cover because of either the nature of the meaning of potential, operational risk, difficulties in assessing the value at risk, a new and unknown risk, f.i. some cyber risks or lack of capacity of the market, f.i. effects of an active war, nuclear explosion. Uninsurable would be an easier question, but to answer yours, everything is insurance for a price. No matter what you are referring to, there will be someone, company that will be willing to insure it. For the industry, when you thinking about it, you are betting on your death and insurance company is betting you won't die. So if you are going to do something that might get you killed and the odds are in your favor that you will die, then when you find an insurance carrier willing, then you are going to pay heavily in that case, maybe even more than the insurance policy is worth. There are a few things to consider here. 1. Is there a market that will insure the risk? Or to put it differently, are there insurance companies willing to sell you insurance for that risk? The answer is yes in case of life, health, auto, house, etc. 2. Is the risk a repeatable event, random in nature, having a given distribution, with individual significant financial consequences, but in aggregate approaching the mean of the distribution? 3. Finally, insurance will only mitigate the financial impact of the event, not the event itself. Life insurance does not mitigate death, but rather financial consequences, loss of income, of death occurs. Health insurance does not prevent disease, rather it helps pay for the cost of the cure, once disease occur, etc. I can't wait for you to complete your insurance studies. These homework questions are best answered by reading the textbook assigned to you and not asking Quora, unless you think these type questions will get you a Quora paycheck.